KU, there seem to be two big themes that impacted the economy last year, one being the Fed as it was increasing interest rates and tightening financial conditions, the strength of the US dollar as a result, and the other big one being the trade spat, which really put a dent into the animal spirits that were in the investor community and the C-suite. So what do you see for this year?
There are hopes that the US and China will come to a middle ground. It is absolutely in China's interest, as well as in the US interest, that China will make a certain kind of concessions. I think out of all the items that US demanded, let's say 40% of these items will be met, 40% is up for negotiations, and 20% is a no-go. China's objective is to avoid any outright collision, any reason for outright collision with the US, to avoid any kind of subversive elements that would destabilize the Chinese economy. And let's face it, what the US is asking China to do is not at all inconsistent with what China needs to do for higher growth in the long run anyways, to adopt fairer trade practices or to protect intellectual property. These are good things for China, so China is willing to make steps forward. And if the focus really just stays on trade negotiations, tit for tat even, I think we're pretty safe. This would buy China some time to undertake some of the reforms, make the economy stronger in order to deal with the US for more intractable problems in the long run.
Or how does the global economy look in 2019 from all the different markets that you operate in?
Yeah, look, first of all, we're coming 2018 with pretty good momentum out of the year. We're entering 19 with a good industrial growth momentum altogether, and we have an enormous amount of uncertainties around us altogether in all parts of the world. If I look at the underlying drivers in industry and in the B2B space where we are active, I'm still cautiously optimistic. At the same time, we have global economies where a lot of question marks are out. I'm still optimistic on China. I think the Chinese growth will continue if you take the 13th five-year plan and the consequence with which the country is implementing it. There is a very long-term pattern and a commitment to keep the growth going. In the US, definitely the first quarter now is being dampened with the uncertainties around the government shutdown that we're experiencing, and we naturally will see that in the pattern of decision making. If I go over to Europe, we have the big Brexit uncertainty, that on the industrial side, players like us, we see people being cautious, saying what comes out of it. Other parts of Europe, whether it's Italy or some other countries, we need to watch very closely. So I think our task as industrial leader in 2019 is very, very simple. We need to stay close to our customers and make sure that the underlying growth opportunities are realized. And then we fly on site very, very quickly. And as you rightly say, we need to react very, very smoothly and fast if the downturn realizes, if some of the uncertainties realizes, to make sure that the industrial space doesn't get hit too hard.
Well, let me start by saying that the IMF's not projecting recession this year or next. Our growth baseline for growth is continued growth, 3.5 this year, 3.6 next year. But we see the risks, and I think it's the risks that could bring on recession. I would point to several. The trade tensions, the discussions with China may go well. There's incentive on both sides who could benefit from a deal, and I agree with what KU said, that many of the changes that are being asked of China will, if China undertakes them, benefit China over the long term.